Hello, investors. Uh, Firstly, let me report to you that we've had a very good month of April. The portfolio has been up about 13% plus or minus, which is great because considering the fall that we had in the month prior to that, which was about 22%, we've recovered half or more than half of the fall. So that's a good, positive thing to say. The times are tough. We are all still under a lockdown, and medically things are still very fluid. Economically also, there's a lot happening. So in this time, we also have been very active in monitoring your portfolio, in trying to figure out that what are the new themes that will emerge, and realigning the portfolio. So what I'm going to share with you today is my mental framework or my thought process on how this thing is playing out. Of course, data, of course, events are very fluid, but I want to share with you what I think is what concerns me. And maybe for all of you who are in some business or any other activity, it may be of useful for you. So what I'm going to have is a general discussion of the framework that I have in my mind for this situation and how I am going to use that to navigate so that we do well with your portfolio. So what I'm going to do with you is share a presentation uh, which will give us a sense of my thought process at this moment. Okay, so well, there's a new reality. There is a post-COVID world. We are going or transitioning through that. What will be the face of this? Nobody knows. At best, we can guess. But I think that the three ways it will play out, first and foremost, is the medical side of it. Whether you like it or not, how this we come out of this, whether it's short term, medium term, long term, is going to depend upon what medical cure are we going to find to this problem. So first, I will cover that. Second is based on what sort of treatment comes out, we are going to have an economic impact. Whether we are going to go through a sharp deep recession or is it going to be an elongated depression, these are all going to depend on what medical solutions we find and how soon we find them. And third, based on how the economy pans out, the industries are going to pan out. Yes, we hear of a lot of hardship, so there are many losers, but there are also some gainers. And for me as a portfolio manager, that is where what interests me. Because just as, yes, there has been some amount of destruction, but when the opportunities come in the new world order, I think that the opportunities can be massive. So for me, I like to see the glass as half full, and the opportunities that will come from these some gainers, and to be able to align your portfolio to that is going to be the key in the post-COVID world. First and foremost, let's cover the medical side of it. Well, we have been talking about an antiviral. The beauty about an antiviral is that if as and when we do discover something, it can give very good cure or the mortality rate can come down. And when the mortality rate comes down, the fear that, oh, this sickness is going to, wipe out humanity is going to go. So an antiviral becomes very important for what we call a V-shaped recovery. Now, what we see is that a lot of things are being tried out. Some have little success, some have failures. But the fact is that till today, we haven't really found out an antiviral that works in totality or with complete success. We were looking at hydrochloroquine last month. This year, Gilead has come out with its own medicine, and there have been some reports of success there. The Japanese have their formulation. And in India also, we are trying the plasma therapy. So whether it is this or a combination of these, or maybe some pre-existing medications that work, is something which still has a question mark. But the thing is that with these things, even though they may not be perfect, what happens is that the success rate or the reduction in mortality rate is something that we are observing globally. With time, medical science is able to handle the patients better. There are more resources, there is more thought process, and there are more ideas that there is coming in. So we haven't found complete success in the antiviral space, but what I see with a little bit of silver lining is that the mortality rates are coming down. And that I think is very positive. It's not a perfect answer. For a perfect answer or for something that really puts an end to this COVID, it's ultimately the vaccine. Now, there are multiple vaccines being tried out, but things that I am looking at with close interest is the Oxford vaccine. Uh, this is something that the Serum Institute in Pune also has already started manufacturing. Human trials are on and they're at an advanced stage. And if things work out, we could have a vaccine by September, October of 2020, which is just a few months away. And the thing is that, as I spoke about the Serum Institute in Pune, they've already started manufacturing. They've taken a gamble that it will work. But the thing is that if this thing comes out positive, the beauty is that it will be available in large quantities to a lot of people in India. Also, there are other 8 candidates which, as of today, are going through human testing. And the thing about human testing is that this tends to be among the later stages. And as and when success comes, they can go into commercial production very fast. So a lot of money, a lot of resources is being put into this. And in case this works out, the thing is that we may not have a V shape because there's going to be a time lag. We may have a kind of a U shape recovery. The thing is that if these don't work out, then the chance of being in a W shape recovery is high. What is a W shape recovery is that we have lockdowns and we were able to flatten the curve. However, as we open up and towards the end of the year, when the Western world enters into the colder and wetter months, we may have another surge. And that is what a W is. That means it almost goes back and we have another lockdown. We don't know, that's too far. But again, the silver lining in this is that there are other over 100 candidates that are working on some sort of vaccine. If you look at the papers, someday you get bad news, someday you get good news. But the fact is that humanity, medical science, leadership, resources have never ever in the past worked on a single solution as collectively as they are working right now. So if you are optimistic about human spirit, human ingenuity, human intelligence, then I guess you need to give it some sort of hope that in these over 100 plus experiments, something will work. And as far as I'm concerned, something that I would look out for is the Oxford vaccine, because that could be the quickest solution and could give us a U-shaped recovery. And India is very, very well positioned vis-a-vis other countries if this works out. So as you hear a lot of gloom and doom stories and things like that. This is a chart that actually shows you how it is panning out or how this flattening the curve is working out. So the gray bars represent the rising number of cases. The blue bars show the recovered cases. So what you will see is that this is varying from country to country. For example, second from the left on top, you see China, where we saw a very early rise of gray bars. And today, they seem to have very good control on it through social distancing. So the number of blue bars or the size of blue bars is increasing. Even in the case of Germany, you will find that the blue bars have overtaken. So also Iran, which doesn't have a great health system, which had a lot of problems earlier, but beyond a point, they have been able to flatten out the curve. South Korea, we hear about. Spain, which was another issue that there is. So there are a lot of countries that have achieved success. India, which you can see in the yellow box, is now seeing an accelerated rate because every country has this curve. But again, there are silver linings also in the case of India. Due to the early lockdown, it's never a perfect case, it's never a perfect case study, but you will notice that the number of recovered cases is increasing. And more importantly, is the rate at which we double our cases is coming down. So what you will see in this slide is that India, which at the moment is doubling its cases anything between 10 to 11 days, that means the number of cases will double in 10 to 11 days. If we had not put this lockdown, you will see that we would have been where the red dot is, which is a few million cases. So this lockdown, yes, it's having an economic impact, but what you can see is from the orange line is that we have been able to increase the number of doubling of cases from 3 when we started to 11. So this is a reflection of the flattening of curve. So to sum it up, as far as medically it goes, that the existing cases, yes, we are able to manage them better because the mortality rate is coming down globally. Science is getting a better cure, though there is no perfection. We are banking on a vaccine for an ultimate solution. There are various which are in human trial, and something works out there, I think can lead to a U-shaped recovery. And the sooner, the better. And if that doesn't work out and gets elongated, there is a lot of other science, money, leadership which is added. So things are not perfect. We don't have the answer yet, but we seem to be getting a better grip of the situation than we had 2 months ago. And that is the joy of knowledge and sharing of knowledge, which is really happening exponentially globally. However, in this lockdown, etc., we have had economic impacts. So now let us get to the economy. This is a beautiful work chart which is put out by McKinsey. I have shared it earlier, but we get a lot of reports. But I found that the greatest clarity about the Indian economy and how situations pan out is by this McKinsey graph. So they have put out 3 scenarios, which you can see at the bottom. Scenario one was that we had an initial lockdown and things opened up, which of course is gone and things haven't opened up. Today we are in scenario two. Scenario two says that the lockdown will continue until mid-May. We are just about approaching there. Moderate relaxation after April 15th. So we are seeing a few relaxations, especially the green zone and orange zone. The red zones are still very tied up. Slowly, supply chains will stabilize, and this will take 3 to 4 months. So this is the scenario that we are playing out, which is the yellow box. Now, linked to that is you can see the graphic representation. If we continue with this without having a second wave, we will see that our economy, which has moved to negative growth, will come back to zero or equilibrium or slightly positive in the third quarter of 21, which is approximately October to December. This also interestingly overlaps with the earlier cases of the vaccines, etc., that I have been speaking about. And the economic impact that we will have, you see it on the right top box, which is circled, is that for the year we will have a negative 2 to 3% GDP. So yes, things are tough. At the moment, we are sharply lower because all numbers that you will see are very, very distressing. But as we open down and as supply chains open up, we will slowly crawl up. The only caveat is that we should not get into a W shape. A W shape means that we may have to go in for another lockdown at the end of the year. If that happens, the hit to our GDP will be 8 to 10%. So let us dwell on the scenario right now. So we are in scenario two. So what could happen is that the economy will contract by about 20% or so in this year, and for the year it will be down -2 to 3%. The lockdown will continue till midway, which is what we are experiencing right now. This is going to put almost 32 million livelihoods at risk. That means that will be the jobless, and we are awaiting a government stimulus, but we will have to have a large stimulus to come, which may be almost 5% of GDP, which is almost a 10 lakh crore stimulus expected from the government. So this is the situation that we are in right now economically. As I said, it is not perfect. It is not V-shaped. That thesis is out. That was a hope that we had a month, 2 months ago, but now we are moving more towards a U-shaped recovery and getting back to normal economic activity only by the end of the year 2020. What are the sector impacts? So you will notice that again, McKinsey has laid out very beautifully the sectors and the percentage output change that they're going to have. Clearly on top are the familiar airlines and hotels. So this impact that it has really helps us to narrow down to sectors that we believe can be opportunities in the future. You will also realize that in the middle section is bank credit, because debt and liquidity is going to be a very big game changer. So the not only is the output change important, but the lower the bank credit, that means the lower the debt, the greater is your chance of survival. And I would also place a lot of emphasis on that. So I have actually studied this and other reports and classified the whole economy into sectors where there are some losers, which is very, very apparent. So definitely the sectors we know which will be losers will be travel, hotels and restaurants. We have a lot of stocks that are listed. Cinemas and malls, these are all places of public gatherings. These will be the last to open out. Autos, definitely large ticket, credit items will take a lot of time. Even their supply chains are extremely complex. So autos will take a little bit of time. Real estate is a sector which will continue to get hit. As it is, it was in the doldrums. But what is happening is that, as I said, this is a highly leveraged sector and credit will be difficult to come by. So I think real estate will get very hit. Also, what is changing is the habit of commercial real estate, where people are learning to work from home. And a lot of IT companies, we saw that in the case of TCS, 25% by 2025, that they are going to actually encourage their people to move away from city centers, move to remote locations, but work from home. So this is going to put a lot of pressure on commercial real estate, which was doing well. Textiles, high labor intensity, and with the migration that's happened back, to restart textiles will be a problem. And leverage financials. The credit business is going to be very, very difficult. So we will have to be very, very careful of being in the right NBFCs or financials which do not have a lot of credit element. We would rather go for financials which have a fee-based element. I will cover that later. In this is the graph that interests me the most, because as an investor, this is where my opportunities are. The first sector that we feel which will benefit a lot is going to be telecommunication. You know, the thing that we are all consuming sitting at home is internet. In fact, internet consumptions in my house have almost doubled, and we've had to upgrade our package twice in the last 2 months, simply because all work and all entertainment is today happening thanks to the internet. And telecommunication will, I think, be a very big winner. We are well positioned in this. We have the grandfather of all of them, which is Reliance, in our portfolio, and we have a large holding. So we will participate in this telecommunication revolution. Reliance also has its benefits in retail. Healthcare and pharma, as you must have seen that we have the sector we are max overweight, or in this whole move that I have moved towards, is healthcare and pharma. So we have almost a 20% weightage in healthcare and pharma, and we feel that this is going to be the new sunrise sector, which had fallen on bad times in the last few years, but we think it's going to be a big one. The next is the digital side. Again, we have investments in companies like Naukri, etc., which we feel have a very good presence in the listed space in the digital side. And we feel that we are well positioned there. In the slowdown or the lockdown that we had, agriculture activity actually did not get so badly hit as much as industrials and services. So agriculture is something also that the government insists or wants to continue. Otherwise, we will have another problem, which is of food. So agriculture is a sector and related things are beneficiaries. However, since it is a lot to do with rural and a lot to do with the government, we tend to avoid that. Chemicals, specialty chemicals. Again, another sector where we have a very good holding, and I have added another stock to your portfolio in specialty chemicals. This is an area which will see the migration of manufacturing or orders from China to India. And Indian companies are extremely competitive. They have already a very good market share. And we feel that chemical companies or specialty chemicals going ahead will do very well. Consumer staples is another space that you and I are experiencing. what we are really consuming from our neighborhood grocery shops, irrespective of the virus, no virus. These are things that will continue to do well in spite of the difficult times. Valuations may be stretched, they may correct a little bit, but going ahead, there is no destruction of demand. This is what we have done in your portfolio. So what we have really done is we have exited those spaces where we feel that there could be stress. Two stocks we've sold out. One is PVR. This is what I have covered. And subsequently, the stock is halved from where we have sold. Axis Bank also is another place where in the credit cycle, but I think we hold a lot of other good private banks. I want to reduce my exposure to financials because financials has been an overweight space for most of us in our portfolio. We have to take some hard decisions. We have to take some courageous decisions because the money that we raise from selling this sector, which could be in the storm for a few more quarters, can be reallocated to other spaces. Like we have bought Abbott and IPCA, which are both in the pharma space, and SRF, which is in the specialty chemicals. So times are tough, but the line goes that tough people survive. And we hope that we are in that space. So this presentation outlines my thought process for your portfolio. And as you can see that we have been very active because as trend investors, we feel that as the cycle or the markets come out of this cycle, there are going to be massive opportunities. The important thing is going to be, are we well positioned in that? So that may require a little bit of churn. It may require a little bit of dynamic activity, but this is very, very important. We are going through difficult times, I agree. However, I think we are holding out pretty well compared to the rest of the market. But more important is our endeavor to make your portfolio be a leader in the next cycle. Because these are markets and these are cycles. Nothing lasts forever. Just as bull markets don't last forever, bear markets don't last forever. And beyond this, we feel that the opportunities that will come will be massive. It's just that I am trying to ensure that we are in those spaces which are leaders in the next bull market. So I end with that, as I have been doing for the last 2 or 3 months. We are trying hard, we are working hard. The results are showing, but at the end of the day, fingers crossed, because this is something where nobody has the answer. It is not a normal situation. We are all experiencing in our lifetime, but at all stages, the effort, the models, and the courage to act on what we believe in is there. And that is something that we are working on. Goodbye. See you next month.